Sure. I mean, I think we're still seeing that structural shift we've seen since the financial crisis, where European banks continue to pull back from a lot of their lending activity. So that's created a lot of opportunities for private debt, I guess, across direct lending, real estate debt and other areas. More recently, sort of some of the areas of specialty finance as well. I think that's going to continue. One of the areas we find particularly compelling is in the risk-sharing transaction space. This is where banks are still continuing to lend to corporate clients, and investors can earn a premium for providing protection on that portfolio of loans. So I think in terms of concern to the industry, I don't see that going away. I don't think banks are going to come back to lending in the way they did, and clearly providing finance to corporates in Europe is core to keeping the economy going. So I'm not particularly concerned about the opportunity going away. Obviously, there are some macroeconomic headwinds with inflation, rising energy prices, geopolitical situations. So we'll have to sort of wait to see how that plays out and the impact it has. Sure. I mean, I think investors' appetite for yield continues. Clearly, the public credit markets, we've seen quite a lot of compression in yields. So they're looking to private debt for opportunities. And I think that we've also seen through COVID, a lot of the strategies have proved quite resilient. So I think direct lending, real estate debt, risk-sharing transactions, I expect them all to see investor demand. Sure, I think that definitely was coming from the investor side initially, be it kind of attitudes and also regulations really driven the sort of focus over the last few years on ESG, and clearly managers have had to sort of step up to meet that demand. I mean, to be fair, I think a lot of managers would argue, and maybe rightly so, they were already incorporating ESG assessment into their process. I think the next probably stage of that is thinking about not just ESG ratings of managers, but what can we do more actively around funding the energy transition or other areas of like that of ESG. Sure. I mean, I think there is hardly really a market exists at the moment. It's pretty limited in terms of being able to sort of sell some of your investments once you're invested. And I think at the moment, most of it is just through sort of private bilateral transactions. So I think it would be a positive. If I think of our clients in particular, a lot of them are moving towards buyout, and that means some of the sort of 5 to 7 year funds might even be too long maturity. So if there was a more established secondary market, I think that would be a real positive.